Hello, everyone. This is Chris Kimble, founder of Kimble Charting Solutions. Today is Wednesday, August the 25th. Welcome to another edition of the great program, Your Daily Five. So today I wanted to talk about a long-term target. I thought it could be apropos as being hit this week. That's actually an 18-year-old target. So what we're looking at here is the very popular Nasdaq ETF, the QQQs, or as many people say, the Qs, and this is a monthly chart. And what we did was we applied Fibonacci to the dot-com highs, and then after a roughly 90% decline, the 2002 lows. And so we've talked about many times that for whatever reason, it seems like charts have memories, and the first memory came into play based upon the 2000 high, 2002 low, back in here in 2018 at the 161 extension level. And so you can see that the Qs were just similar to today, but not quite as violent to the upside. We're just marching upward and upward for almost 2 years. And then once it reached the 161 level, you can see it stopped on a dime, or essentially started to catch its breath. And these are our monthly charts. And so you can see for 60 days, it tried and tried and tried to get above the 161 level, and then it failed. And then it peeled back almost 25% in value and then made another run at it. And since this is a monthly chart, you can see 1, 2, 3, 4, 5, almost half of a year, it traded barely on back and forth on each side of this 161 level. Finally, a bullish reversal took place here, and then it took off. And so what I find is interesting is, this year's COVID lows had something to do, it appears to me, with the 2002 lows. And this is right here, is at the 161 extension level, which was resistance for many a months, became monthly support back in March. And you can see this is one of the largest candle bullish reversal wicks in many a year. And then look what's happened after it held at this old resistance, was new support, that it's rocketed higher. And so the 261 level comes into play at 285. And you can see where we're trading as of earlier today at the 285 level. So there's a couple of things. Obviously, the trend is bullish. What caused it to pause here for a while is only known in the rearview mirror, right? So we're going into another long-term extension level with a lot of steam. I mean, this train is rolling at a high speed. So can a chart have a memory of 18 years? Is that enough to slow this down? And so time's going to tell if history is going to repeat that it's going to pause and it build an upper level base again, or if it busts through it. But the one thing that I wanted to make everyone aware of is, where's the next key Fibonacci extension level? And that comes into play around the 450. So but I believe it'll happen, when the Qs finally take out the 285 level, be aware that the 450 level becomes the next very long-term chart memory. So speaking of upside breakouts and the internet, I wanted to show you this chart on FDN, and that's the internet ETF. And I want to say I've got a dog in this fight, because my family and our customers, our members, have owned this for several months. And so I like this for two reasons, but the most important reason is price. You can see that it looks like it double bottomed at the March lows, going back to the Christmas 2018 lows. You can see it continues to create a series of higher lows. But I wanted to bring it up for a couple of reasons today. Number one is that it's is creating these higher lows. But you can see this is last week's close, was at an all-time high for it, and then we're having a further breakout today. So very positive price action. And one of the other reasons that this appeals to me is kind of the COVID crisis strong plays. And so these are the top 10 holdings of FDN. And one example today is earnings of the top 10 holdings for Salesforce came out last night. And so, again, we all know that there's certain industries that COVID's been hard on, and there's certain industries that have helped these companies play into their strength. So I like this play for two different reasons. If you haven't been on board this, I would be an owner, and then I would just set the stop below these two support, levels roughly at the 180 level. So again, all-time breakout in the internet ETF FDN. So as we just looked at a couple long-term bull markets, we're going to flip the page and look at a long-term bear market. And this is the Thomson Reuters equal weighted commodity index. And you can see inside this blue channel that it's created a series of lower highs and lower lows for the last almost decade. But one thing that does jump out to me is that at the financial crisis lows, this is a monthly chart, you see this really monster candlestick, pattern at the depths of, I always think of the Churchill movie, The Darkest Hour. This was the darkest hour in the financial crisis, and you can see it ended up being a very tradable intermediate to long-term play for commodities. And we had back-to-back monthly bullish reversal patterns in March and April at the 2009 lows here. And so now we're experiencing this counter trend rally, which has it testing this almost decade-long rising resistance. So it's easy to find talk about all the stimulus programs. Is it going to work its way into society and create inflation? And so to me, this could be a beneficiary of the dollars floating around. Maybe velocity of money starts picking up. But if commodities can break out here, then the top of this trading range that looks to be influenced by, as you can see, the 2009 lows and then highs for several years come into play around 450. And so that's 7 or 8% above current levels. So if commodities break out here, the next big test is a multi-year, almost a 5-year trading range. And if commodities can succeed in breaking the 450 level, then it would really be a confirmation that the world is growing / we're seeing some inflationary pressures being passed along. So one of my favorite plays in the commodities sector outside of gold and silver that we've covered, when I did the very first Your Daily 5 2 months ago, this was a chart that we shared, and this is a 40-year chart on coffee. And the reason I shared it then was that you see these multiple long-term channels. The average rally out of these channels was a 200% gain, with the smallest one of the four being 100%. So here's why I shared this 2 months ago on Your Daily 5 was coffee was trading at what looked like to me an ideal price point, dual support to really take off. And so you'll notice in this chart that we shared 2 months ago, coffee was trading at 95. So if we do an update here, this is an updated chart on coffee, you can see that it's trading at 125. So coffee's up about 30% in the from the 60 days that we shared. But the key I want to remind you of is the smallest rally out of those long-term breakouts was 100%. So even if you feel like, wow, it's up 30 and I missed it, if history happens to repeat, that suggests there's still a lot of upside price action to take place. So this week, coffee is attempting to break above falling weekly resistance. The 132 level, about 5% above current prices, is the next resistance point. And if that's taken out, then it's on its way to 140. So I like the price action continuing to show in coffee. One of my favorite things about StockCharts.com is the ability to look at rate of change. This is the chart of silver, gold. And we all know if silver can outpace gold, it's usually positive for both metals. So the silver gold ratio is up 51% in the last 16 weeks. And that's the strongest 16-week rally since these ETFs came out. This rally is taking the ratio up to the top of this falling channel. So to me, this would be not bearish, but a likely place that you could see a little pause in this ratio after such a monstrous rally. And so this is where I think a little consolidation is due in silver. And our final chart here looks at silver on a monthly basis over the last 50 years. And we applied Fibonacci to the 1980 high at 50 bucks and the 1990 lows around $3. And this is a blow up of the last year's monthly action. But you'll see in March that this giant candlestick bullish reversal pattern that took place here. And so far, we all know the month is not over with, but silver is attempting to create this reversal pattern. So I wouldn't be surprised for silver to take a pause for a little bit, but its next upside target, once it takes out the 50% level, is just below 40 bucks. So I want to thank you again for joining us on Your Daily 5. This is my 40th anniversary in the business, and we're passing along a 40% discount to StockChart members, and you can find this discount at the top of the screen at kimblechartingsolutions.com/StockCharts. Thank you, everyone. See you next time.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video.
Yay!
If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.